Can you believe it? 2021 is almost over. I'm going to go do a recap of what has been going on with the Bay Area real estate market for the year, why things have been what they are, and moving forward, what am I expecting and predicting for 2022? You don't want to miss this. To give you an idea, this year we've been very, very fortunate. We have helped 64 families this year buy and sell in the Bay Area. So if you have any questions or thinking about buying or selling in 2022, we need to connect. Text me on my number below, or feel free to reach out and directly message me on any of my social media platforms. I would love to connect and help you along with this journey. So let's first talk about what has been going on in 2021, because that will give us a little bit of a picture moving forward in 2022. Let's take a look at the data itself. My approach is very data driven so that you can personally see what is actually happening with the Bay Area real estate market. Now, I'm going to go over 3 different counties because the 3 different counties have all reacted differently. Why is that? Think about what has happened through the year. There's been a few false starts of going back to the office. The very first false start was initially most of the offices were going to be back open in August, September. Look at all the articles and you will see that most companies had that plan. However, Delta variant did not want us to do that. So ultimately, we did not move for that time. The next milestone was to move in January and February. And so you see people accordingly, as you can see in the prime areas like San Mateo County, which is very important based off of where people want to be because of the jobs and the locations and potentially returning back to the office. Keep in mind, think about where are most of the jobs at in the Bay Area. They have continued to grow very densely. So there's been a lot more commercial real estate growth than there has been for residential growth. So people have been factoring whether it's living in San Francisco or living around Mountain View, Sunnyvale area. So you can see San Mateo County actually reacts to this the most relative to most counties because it is the highest and most expensive county in the Bay Area, but at the same time, it has the best location and the most limited amount of homes that one can choose from. So let's take a look at the data itself. You can see San Mateo County for median prices, it has increased from January from $1.5 million. This is for single family to June, which is 2.05. That's a $550,000 increase in 5 months. And if you look at that from a math perspective, that's about 33%. It declined, as I mentioned, when people had kind of conventionally given up. There was a summer slowdown. So declined about 200,000, which is about 10%, right, in 2 months. But it has steadily picked back up as people were potentially returning back to the office. You can see it picked up again from 185 to 2 million. So 150,000. So that's like a 8% or so. And then right now, we're kind of midway in December. It's kind of declined. We'll see if this is an aspect of seasonality or because people have stopped because the return to office has been delayed. So this is a case for San Mateo County. Let's take a look at Santa Clara County so you can see that data point of median prices. Similar trajectory, but different outcome right now for December. If you look at beginning of the year, January, 1.36 million to the high point of June, 1.725. That is also a 30% increase. It has also declined in August, September, not as steep. And it has picked back up. December figures are really interesting, though, in Santa Clara County. As you can see, it has already been the highest of the year. So we'll see how this plays out if this holds true as we close off the year. And the last data point I want to share with you guys is Alameda County. Alameda County has picked up from January to April. So 1.06 to 1.285, or you can look at May 1.3. So that's equivalent of 240,000. So that's a 24% increase in 4 or 5 months. You can see the year has been a steady decline, actually, as people have been considering to go back closer to where the offices are. And then November was a very strong month. This was the highest, or at least tied the highest of May. And then now December, it has kind of lowered down. So really interesting to see. I hope you can see these data points so it's very clear. Now, make no mistake, the next data point that I want to share with you is the median list to sale price ratio. You can see for Alameda County, the prices have been relatively similar, even as big of a jump as it is from October to November. That's 50,000. That's 2%. right? So it's not a lot, but you can see it's been relatively flat and predictable all through the year, as long as you look at what other homes have sold for. So let's take a look at that. Sales to list price ratio in Alameda County. What does that look like? You can see the ratios: 113%, 112%, 112%, 113%, 113%. So the idea I want people to understand this is, at the end of the day, it's an artificial list price that people are doing in Alameda County by default. You can see prices have been predictable. It's not going up 10% every month. It's been very predictable. You just need to understand where to look, what are homes selling for in a neighborhood, in an area. And then if you're able to find something similar, you're able to land your dream home. Keep that in mind. Pro tip number one. So don't be discouraged, and understand what other homes have sold for, so you can find and do the right math and the right calculations. The next data point I want to share with you is because this ultimately scares a lot of people. So I want to share that. I also want to share the number of sales. Like, this is very important so people can see. I'm going to look at Santa Clara County. We're going to look at the last 3 years together, because we always keep hearing, oh, there's so little inventory, or there's no homes coming on the market. Let's take a look and let's see, is that really the case? Is it really there's a shortage of homes coming on the market? You be the judge. Let's take a look at it together, right? So this is what it is. Santa Clara residential. For this exercise, I'm just going to highlight all of them: single family, condo, and townhome. So we're going to go through the entire data set, all homes. And let's look at the data together for the last several years. Now, keep in mind, COVID happened basically around the early 2020, right? I mean, I think there was some news at that time, but early 2020. But you can take a look at the trends. Prior to COVID, look at January figures: 660, 631, 679. But look at this year. We actually had a lot of homes that sold this in the beginning of this year, way more than we've had historically. Same with February as well this year. Same with March. Same with April. Same with May. Same with June. Same with July. Same with August. I'll make this bigger for you guys to see. Same with September. Same. Well, actually, October compared to the last year was less, but we have way more than we had in the previous years. Same with November. Look at how many more we've had actually over the previous years, right? And then look at this December figure, way more than the previous years as well. This year, I don't suspect as much. And we'll go over the number of new homes that come on the market. So I want people to understand, this is not a lack of new homes. This is a very high buyer demand. And the buyer demand will only shift if interest rates significantly jump up, people lose their job, or they just decide to not want to buy anymore. But make no mistake, if there's been more transactions that have been going on since the previous years, there is no shortage of new homes. You just need to do the best. And this is why working with a top realtor like myself will give you an edge. This year, of the 64 that I've helped, I think 50 something were home buyers. And so as competitive as this year has been, relative speaking, for previous years, it has been extremely doable. So you do need to align yourself with the right expectations, align yourself with the top realtor and producer to give you an edge to win. There are no shortage of opportunities out there. Everybody has plenty of at-bats. Lots of at-bats. Everybody has plenty of at-bats. It's a matter of winning it when you're at-bat, because you can see there's tons of chances. Like, there's no shortage. The data is very clear. This is the number of sales in Santa Clara County compared to previous years. So I want people to understand that, and don't be discouraged if you don't get it. But as long as you're making competitive bids and good bids, you will win the home. So have the right expectations, make competitive bids, make data-driven bids, and you will be successful. Next thing I wanted to share is number of new listings, because this is always a good data point, because so people can see actually how many more are actually coming on the market. So you can see the number of new listings. As I mentioned, this beginning of this year, we had way more than the previous years. Same with February, same with March, same with April. May was a little bit lower than the previous years. So a lot of people just kind of moved up their time, because you can see it was a very, very strong April. We had 300 more than usual. So that accounted for a little bit less listings in May, but we had more in June, more in July. August was about the same as last year, but still more than the previous years. September was a little bit less. But look at the figures later. October year over year is less, but the same about as before. A little bit less from November, a little bit less, but about the same as before. December figure right now is 460. How did that compare to the past 3 years? It's already more than what we had in the past few years. Now, you can see some of it was backloaded in the last year because COVID was getting better, right? Because it was a bigger backlog initially. I mean, we're talking about April when COVID was at really the peak fear at that time. We had half left. So it's kind of a backlog for the end of the year and the beginning of this year. But quite frankly, we have more new listings this year than 2018, 2019. So be mindful of that we have a lot of new opportunities. It's not as much as the previous months. So don't be discouraged and be mindful of that. But it's still a lot of new homes that are coming on the market. So be cognizant of that. Be ready for that. So what do I think of what's going to be happening? What are my predictions for 2022, given what I see? You saw previously that the market has increased for single family homes about 25 to 30% in 1 year. Now, I don't see it going to be as extreme as that. However, I would argue and I would say it's not likely for it to also slow down in the sense of going to like zero and being flat or declining. My prediction is that we will probably see a 15% increase to 20% increase for single family homes for this year. I think a lot of it's going to be in the beginning of the year, quite frankly. I think in the next several months, prices will continue to increase. They'll increase fairly decently from a month over month perspective. And why do I say that? There's a lot of people looking for homes right now as we speak. Just go to an open house. If you don't believe me, check for yourself. Go for a home that is priced fair, and you'll see if it's like a hot home online. It generally is priced fair, if not low, and see how many people are actively looking. Now, all those people can't win that one house. So there's going to be a lot of people that are continue to be homeless until they find the house. And so at the end of the day, there's still a lot of people looking. Every house will typically have multiple offers. It doesn't mean for you to be discouraged, but it's also important for you to be realistic when you're going to be making competitive offers. Like I said, align yourself with the top realtor like myself. We can go over the game plan. You can text me below. We can set up a time for a consultation so that you are ready mentally for what it is to do. So that's number one. I think the buyer side is still extremely strong. Number two, I think a lot of people are divesting from stocks. The stock market had took a big tumble. So let's take a look at it together. Or let's actually look at the NASDAQ because most of the NASDAQ is in tech. So you can see what has been going on through the year. There's been a big decline initially, pretty steep, but it also picked up again. So it's not like a crazy change, right? But it has been a little bit more volatile. There's been people taking some profits off. And quite frankly, a lot of people have done extremely well in the stock market. So they've been doing very well in the stock market. They've been doing very well, as you can see, in the crypto space. Okay, look at Bitcoin. They dropped a lot again. But still, it's still like a decent amount higher than the beginning of the year. As you can see, year over year, still 147%. It's taking a big tumble. So some people may be liquidating and selling to divest and to get into other assets. And real estate has been, as you can see, still doing very well and continue to modestly increase relative to the volatility of these different asset classes. So my prediction number two is that people are divesting now and they will be buying rental properties or investment properties or trading up for their home. So I will suspect that there's going to be a decent amount of buyers that will be looking for additional properties here in the Bay Area. That will continue to happen. I see it already right now. That's a big conversation I'm having. I have too much exposure to my company stock. My company went IPO. It's so volatile. I want to cash out. Let's get into something safer right now when things are seemingly a little bit, maybe some stormy waters ahead when it comes to the market. So I see that as number two. Number three, I predict interest rates will rise. So let's take a look at interest rates so that you can see for yourself what has been going on with interest rates and where are they likely to go. So you can see over the last 5 years, it's been incredibly low. And even now it's still very low. I mean, quite frankly, 3.11% is just crazy. Now, it's not the same as it was even earlier this year at 2.7, 2.8, but 3.1 is material, right? The difference of a 1% change of interest rate is roughly about 10% of the value of a home. So it's a very material thing. But I did not say as interest rates rise, prices will decline. I'm saying that the price will still increase at that amount, but your interest rate will also increase. And the reason for that is because this is not a zero-sum game. This is a buyer demand that's extremely high. There's a lot of buyers out there. And I'll tell you about my last point about the migration of buyers. But more importantly, related to interest rates, you will likely be paying more interest as the months goes on. There's been a lot of tapering going on. There's been a lot of conversations, a lot of planning. And quite frankly, I mean, if you're just a betting person, it's been low for so long, right? I mean, chances are the best case for you is they stay at this level for as long as you could. The worst case is it just continues to pick up, which I suspect it will. My bet is probably by the end of this year, we'll probably be looking at about 3.75% for 30-year mortgages. So be mindful of that. Don't be surprised as this increases. And this is the general 30-year mortgage rate. Prediction number 4. But the last one I'll bring up is, why is the buyer demand so high? It's not just of the amount of people out there. Stocks have done well. Most are in tech. Tech has done phenomenally well. Just look at all earnings report. Just absolutely smash, smash, smash. But at the end of the day, take a look at how much people are making and look at the demographic. We have a massive, massive thing going on right now. And it's my generation. It's the millennial generation that are now becoming homeowners. They have been paying very high rent. They are settling down. Many are getting married. Many have long-term boyfriend, girlfriends. Many want just a more stable life now. And so a lot of people move to the good old suburbs, right? Whether it's the suburbs of San Mateo, Santa Clara, Alameda, Contra Costa, all these areas around have done very well for that reason. That migration is not changing. The millennial generation is a wide gap and, quite frankly, a very high income producing base. So many of my clients are millennials and they're first-time buyers, and they'll be buying up to them. It could be a small condo to start off with. It could be a $2.5 million home because the income is there. Generally, most people can afford 6 times their combined income. So to give you some sense, just think about that. So if you're making $200,000, you can probably afford a $1.2 million home, right? So, and that's because of the factor of low interest rates. So keep that in mind. It's all a variable as to what people can afford. Now, it doesn't mean you're going to buy up to that, but just know, why can a lot of people buy a lot of the homes in the Bay Area? That's the reason, right? I mean, if a starting engineer at Google, Facebook, LinkedIn is $250,000 total comp, yeah, they can buy a $1.2, $1.5 million home on their own as an individual. Never mind if you're dual income. So keep in mind, the ability to buy a home is nowhere as close or nowhere as far as you think it may be. It's more of a mentality than anything else. I hope you found this video helpful. It's going to be a really exciting year for 2022. On my end personally, our goal is to help 150 clients next year, and I hope you will be able to take part of that journey with me. And my team is actively growing. We're always looking for top agents to join my team to be able to help and service my clients. So if you or anyone you know is looking to make the move, to help a lot of people, to live a great life, and to have fulfillment, then please have them reach out to me as well. We are always looking to bring on several agents as we continue to grow our team, because we're fortunate for the trust that you guys give to me for your real estate investment journey and your goals. Enjoy the rest of 2021, and I will see you the next year. Bye now.